all you devils out there. Sam here with you, and I'm excited to be introducing the latest addition to our lineup of tools and indicators. This particular package is available both for Ninja and Quant Tower. I'm going to show it to you in Ninja, but you can expect some follow-up videos with it applied in Quant Tower as well as we continue to expand the Quant Tower lineup of products that we offer. Now, as I always do, I'm just using the most recent week of data. There's never any need to cherry pick anything. You will notice a couple of things right off the bat. First, as I always do, I have our toolbar up here, and then I have the initial balance, which I do for multiple reasons. One, it frames the day for us so we get a sense of trend or range. Secondly, just as a reminder, I do this as considered a public service. If you don't use ours, draw them yourself or use somebody else's, but you have to know where those are. First test of the IB low, here's a retest of the IB high. You have to know where they are, right? It's mandatory, right? If you're a day trader. Okay, with that said, now let's dig into what we see here. Now, the core of this system here are the outer bands and how they relate to the inner bands. The cloud here and the dots that you see are additional nuance here to refine for a bit of trade management. Now, you will note, of course, that I'm working with Renko bars. By default, if you are making an investment in this package or trialing it, this is the default that's going to come, but that would be suggested for the ES or the MES. Any product like this, when you're testing and trialing it here, you always start with the micros. Certainly, given the very high volatility we've had lately, that this would be a good starting point. So I'm using everything here is default, right? Just as as it would be available to you were you to download it as a trial. 19 bars, it's. You got to. One thing about Renko, you have to be careful of. You have to understand the way that they're formed. With a 19-bar Renko, that means we have a 56-bar, it's 56 tick range. You can see it right here. Here's a good example, and I just make a point of emphasizing this. There's 56 ticks of range there, in that it's a little deceptive to your eye with Renko bars as to what risk you're actually taking there. You got to be. It's just a helpful suggestion here. So if you're working with a 50 tick stop or something like that, you might think, oh, well, that's plenty of cushion here. Well, you'll get eaten alive right here, right? It'll be stop, 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 stop. So just word to the wise, right? But just remember with Renko bars, right? Of course, after the fact, right? It's easier to analyze it here because the bar's already shaped. But while these are shaping, those are 56 tick ranges here, can be a little unsettling. Okay, with that said, just appropriate warnings for that would be applicable to any Renko bar, right? Anything that you've got to understand the range of what's involved with creating the bars. Now, with all that said, I think the best way to approach this is to break these down individually. So what I'm going to do is start with the outer bands and the inner bands, and then we'll work towards the EMA cloud here and the alerts, as they're called in this GRIDAlgo system. By the way, I can't answer as to why it's called GRIDAlgo, right? There's no grid trading involved here. The reason I can't answer that is because we didn't develop this product. It's got a following. It's very popular. A lot of people love it. And we were talking with the developer about ways we might work together, and ultimately we just decided to buy it from him. We liked it so much we figured we'd just buy it. So we own the rights to this now, and we will likely continue to refine and improve it. But as it is right now, I think you'll find it's very tradable and offers a lot of advantages and kind of a nice augmentation of things you may already be doing in the market. Now, of course, with any band type of system, the assumption it's mathematically designed to approach trading in the same way you would approach any statistical analysis, and that's a reversion to the mean, right? We know over time, as volatility ebbs and flows, there will be a reversion to the mean. So in a band system like this, the mean is the center line. What the product is doing, and we'll look at these in a second when we go into the individuals, you'll see it up here. What the product is doing is it's taking the history of what you've loaded, and it's per your instruction, and there's variability in this. We'll look at that when we dig into the settings. Based on what you're setting it here, now I have it again. This is the default. So what I'm asking it to do is optimize the bands so that only 10% of the price action takes price outside of the outer here. I put them in gold here so they're easy to see. So that only 10% of the time, right, based on the history, will the price get outside of these bands. Now, let's go look at that so that this makes more sense to you. So let me open this up. Okay, so now I'm inside here, and this is the grid dual bands, right? That's what we're going to focus on. Despite we have all these other things on here, we'll get to those in a second. The grid dual bands. So what it's doing, it's got a calculation method here, and it's giving you the choice of either ATR or standard deviation, right? I would encourage you to start with the ATR and then do a little experimentation. I have it loaded with standard deviation as well, so we can look at them. We'll look at them both, but this is a good starting point. So these numbers here, I would leave these as is to start with. Now, of course, everything is adjustable. You can tweak these to your heart's content. But this is a very good starting point based on the creator, his history of working with it. These are excellent starting points. I would encourage you to stay here for both main bands and fast bands. Now, once you get comfortable with what the bands are doing, then you start tweaking a little bit and testing and seeing if you can find something that you like better. Again, a good place to start. So you notice here we're looking at ATR on the outside bands, ATR on the inside bands, but the key point here in terms of the optimization that relates to what we see up here in the top left is that I've told it, and again this is by default, to optimize the main bands so that price is only outside of the bands 10% of the time. Now I could change that. I could make it 8%, 5%, 2%, 20%. There's no magic to 10. It's a good starting point, right? I mean, okay, 90% we're going to be inside of the bands. Now remember, what that's doing is anytime you're optimizing, we're looking back historically. So based on the history of the data that I have loaded here, to achieve a result such that only that price is outside of the outer bands 10% of the time, that means these numbers. That means these numbers right up here. Okay, so understand that it's using that history to project forward the settings that should accommodate that going forward. Now, understand, right? Anytime you're looking at optimization, that means that historically the bands have been optimized. They've been optimized to meet that criteria. With this particular band system, where the optimization stops is at the right edge of the market. So those settings, based on history, are in play right here. I mean, if I just to make the point. So from this bar forward, those settings are based on the history. Now that doesn't mean that that's going to contain 90% of the price action going forward. It means that statistically there's a high probability that that's the case, but that doesn't mean that that's necessarily what you're going to experience. I know that's a bit of a mouthful, but it's important that you understand the bands are not optimizing forward. They're optimizing backwards to give you the setting, to give you the best potential result going forward. Hopefully that makes sense. So you will, if you've played with our TMA bands, with our crazy TMA bands, it's the same idea, other than we're changing the coloring of that period of real-time trading where there is some optimization. Here it stops at the right edge of the market. So you optimize going into the day based on the prior history, and then work forward in real time with no optimization. If you were halfway through the day or the morning or whatever the case may be, and you had extreme volatility, as we've had in this last week, you could certainly re-optimize from that moment in time going forward by just hitting reload the script, and it will re-optimize based on the day. Let's say you're an hour into the day and we have massive volatility. Well, if I wanted to re-optimize, I could just reload the Ninja script, hit an F5. And then it's going to incorporate the new range of volatility from that hard right edge forward. Right? So that's a mixed blessing, right? So it's very powerful that we get that optimization based on history going forward, but it does create a problem for backtesting because you're backtesting optimized results. So this is a product you definitely want to trial and work with to understand how it works. So now that said, right, that's you got to be careful of doing a back test and looking at this going, wow, well, based on this, if I just went back here and said, oh my God, look how perfect that was. Well, yes, that's perfect based on the history. That doesn't mean it's going to be perfect right here. So this is the kind of signal it will give you in real time. If this were real time, if I were to do something like this, right, and we've been optimized up to this point in time right here, then going forward, this would not be optimized. It would be using the history. So as we hit this level here and we get all three components are firing here. We have price outside of the outer bands here in gold, happens to be at the IB low, hint, hint. And then additionally, as we snap back in, you'll note here that the band, the green band here, the inner bands, the green-red bands here, have also gotten outside of the bands. You see here where there's a bit of a hook, where it hooks back in. Well, that's what's triggering that little triangle here saying, hey, heads up, right? Potentially there's a long entry here because statistically we're at the outer edge of where the market, given its current volatility, should start to retrace towards the mean being the center line. So if you look back in history, you're going to see that this is extremely accurate, right? Here's one, right? It's just because it's optimized to that volatility. Now I'm going back, I think I've got 10 days loaded here, including the overnight session here. This is very tradable in the overnight. Optimized, right? Now, is that going to hold going forward? Well, we don't know that. But it gives us a good historical reference point so that given the again, current volatility. Now, if volatility is dying down, right, and you're not getting to the edge of the bands, well, then you might just hit an F5 and re-optimize to that moment. Then no repainting going forward. Okay, right. So with that said, let me get over to the bands here again, and we'll talk about some of the things that we're seeing. Let me pause for one sec. Okay, I'm back in the parameters here. I grid dual bands. Again, these are optimized results, so I'd leave those as they are, optimized based on what you've set here in terms of what you've asked it to do. I will note here there is the option to have it periodically re-optimize with a refresh. I don't know why you would want to do that here because you don't have enough history. I would only do that if I was seeing the market move way outside the bands or we were contracting very tightly. You might consider just manually doing it. I would not encourage you to leave that on. It's an option. Play with it, right? See what you think, but I would encourage you in initial testing with this to leave that off. Everything else here is, well, there's all the color choices, right? As you can see here, I changed the colors. I think the default, they just come in sort of a silver. I just changed the colors here to make it stand out for this video. Up here, we have choices of whether we want to see arrows, stripes, and dots. These are different signals here. Let's go over those very briefly. So, let's see. The arrows we talked about, right? So do I have an arrow here? I mean, okay, but we looked at the arrows. The arrows come when here's an arrow. When we get price outside of the bands and then we come back in. There's an arrow signal right there. The lines are when the inner bands get outside and then come back in, right? We get a line right here as in heads up, right? That may be something you want to pay attention to for movement towards here. In this case, we come right to the mean, get a little bounce, right? And then we go sideways. Now that's towards the end of the day. So that's not a great example. Dots are a retracement. Let me cancel that here. So here's a couple of arrows and here's a dot. So again, triangle, all three are outside, and we come back in. Our target is the mean. In a dot here, the trend is down. The dot is a retracement alert, as in, okay, we've got a bit of a downtrend here, although this is not a great example of a downtrend. But if we've got a higher high here, lower low, higher high, lower low, higher high, lower low. This is a retracement that you might consider, and in this particular case, likely you've got some fibs involved here. Oh, get you right here. Oh, in this one we get 786, right? We break the gold and go up to a 786, but look at the retrace here. So it's not I see a dot, I take the signal. It's okay, heads up, this might be a retracement that you might want to consider here. Now, based on your other technical tools or how you read the market, you might consider that as a place to be looking for a short. It's not a see a dot, take a trade, or see a line, take a trade. Right, but it's an acknowledgement that statistically we have gone outside here. We get barely outside the bands, but then as we come back in, then we get the line. Right? Again, the line is not sell the market. The line is, okay, something statistically is happening here. Same thing here. That's not buy the market. It's, okay, we've made it back to the mean. The inner bands, right, we've come back. You see, it's right to the edge as the bands come back in. As they come back in, now we're getting these signals. Not necessarily buy it, but just an acknowledgement that we've been outside, right, of the typical range, or in this case, 95% of the range, and that we're hooking back in, right? These are in the designer's language. He calls these hooks, right? As the inner band hooks back in. So something to consider here. Again, this is the bands going out, coming back in. Oh, it's probably better to go off of Friday. Here you see again now optimized, right? So careful of that, right? It's optimized. So what we look at here and say, hey, we're outside of the bands, right? There's the hook. Here's the line. Do we want to take this trade here? Well, in real time, if you saw that, yeah, there's a perfect retrace to the midline, right? Reversion to the mean. Here's reversion to the mean. Right, where we want to be focusing is over here. Again, so the point being, we're using all of that history to give us the highest probability of the range that we can anticipate going forward, right? It's just like any ATR setting. Well, what has the ATR been historically? Does that mean that's what it's going to be going forward? No. But I'm rather than being blind to what it's been historically, I've got this range of what it's been historically that can guide me. Now, that doesn't mean you have to use this exclusively, right? You might use it with volume profile or VWAP band, right? There are other ways that you can include areas where the market typically finds support and resistance, but these can be an additional augmentation to reading that based on these bands. Right, so this is the foundation of it. And I think what I'm going to do here is I'm going to pause here on the first one before we go into the inner bands, so because I have a tendency to ramble on these videos here, make them too long. I'm probably already too long already. But I just feel like it's very important that you understand where the optimization ends and where it starts, right? Why does it optimize? To give us the best potential reading going forward. It does not repaint in real time, only the history. Okay, with that, let me pause here on this first video, and I'll see you on part 2, and we'll dig into the inner components here that just add to that analysis and the timing of when you want to enter the market. Okay, I'll see you on part 2.